Good afternoon, traders. This is Christian from It's Tribeca Trade Group, and it is Thursday, March 12th. So, big continuation to the downside. I have theme of the day: equities continue plunge. This started to feel like a pretty decent, just clean out day in terms of what we saw in the averages. Definitely continuation from what we saw yesterday as well as the last couple of days. I'll review the charts in just a second. But you can see the Dow, just to kind of go over these numbers, they're pretty startling. The Dow finished down 7%. The Qs finished down 9.1% on the day. The diamonds finished down 10, and then you have your small caps getting absolutely crushed again, down 11%. I'm going to talk about those small caps and the ratio that we talked about yesterday. Gold, again, you can't hide in gold, down 2.3%. And TLT was just up slightly for the day. That actually sold off from where it was earlier in the day to finish up 60 basis points. That's it. Uh, Silver was down 6.6%. But yeah, look at the VIX. This is really interesting. The VIX up 40% for the day. Absolutely monumental move in the VIX today, up to 75%, up to 75, excuse me. So, let's talk about a couple of these things. Was this a washout day? Uh, I guess I think you could have asked yourself that question a few different times. So here's what the VIX did today. The move from, basically the gap up to 21, back just towards the end of February, from 22 up to 75. Pretty unique. So I hear a lot of people talking about, trying to make comparisons. So this is the first time from when this happened, and I don't think I understand why people make these comparisons because it's been a long time since we've seen something like that. But each one of these is different. There's some things that are have some similarities to them, but each one of these types of events, like 1987, 2008, this is different than 2008. 2008 was a different situation. And there's lessons to be learned. What I kind of learned was to try to get out of the way, basically, and let this unfold, and let it play out without, basically losing your shirt. That's the situation I think that we're presently in right now. But this is what the VIX looks like now, right? And I'm using like a weekly chart. I guess I could use this for daily, but let's just see for the. I mean, so this is what it looks like now. But if we go back to 2008, you could see it's kind of a similar move. We hit basically, I think it was an 89 in the VIX back then. It seems like this took a little bit longer to transpire. Right, this was from September, and then basically beginning. When did we go over 20? Basically above 20 back in the September of 2008, and then this topped out almost towards the end of October, so about maybe 6 7 weeks. This feels a little bit faster to that, and notice like it. There was these days where the VIX really came in pretty hard. You fast forward to now, and that kind of allowed you to kind of get out a little bit and to catch your breath. Not so much, Look, I mean, look at the blue candles on the screen. There's very little chance to kind of catch your breath with this. This is much faster, so it's different, right? And there's things that are happening faster. So one of the things that I've been looking at is, first of all, I don't think there's there's no buy signal at the end of the day. We finished, even though the percentage difference, the percentage change for the day is different than yesterday. It kind of felt the same thing. I was comparing yesterday, if you remember, like the 5 minute bars, and like in the S&P or in Nasdaq, and I was saying that basically the first, again, let me bring up a 5 minute bar, but the first couple minutes of a 5 minute bar would be green, and then the last 3 minutes it would be completely wiped out. Like here, for example, right when we're trying to turn the corner, like a couple times, trying to turn the corner here, beginning of the bar was completely green, and all of a sudden it gets smacked. So, and over here as well, just very, interesting that the buyers try to take over and the sellers are still in charge. So when that's going on, when something like that is going on, I tried to day trade a little bit, as I have been all week long, but I know to basically every time I get into one of these trades, I've got a stop price, and it's painful getting stopped out. It absolutely is. Because you feel like, oh, geez, you tried again and it didn't work. But I mean, I had some trades. I actually was had this. I had Apple on for this, and I got out. I also had a little bit of Amazon, which I got lucky with too. So that worked very well. So, but the whole thing is, you get something like this, then you try to just sit on your hands, because this was the announcement that they're pumping a lot of liquidity into the system. The Fed is going to be buying not just short term, but securities across the curve, and the Treasury curve. And look at how quickly this did not last. So, seeing that the sellers are still in charge here, now again, you have to kind of. I think everybody has in the back of their mind that this is going to be a big buying opportunity, but you could have said that yesterday and we're down another 10%, which is quite painful. So you have to let things slow down a little bit. Again, a couple of things that's on my radar is this ratio between IWM. If we look at this 1 year, I mean, this is absolutely insane to see small caps get completely, the spread between small caps and large caps get blown out. At this point, again, I've used this analogy before, but it's like a rubber band at this point. This is going to snap back. And I don't know if I necessarily want to go long IWM, but I think it'll be a good signal. I actually tried going long a little bit of IWM today, and got out of it, I think, for small profits. Here's all my trades for the day. You could see what I'm doing. um, I think I got stopped out on the last piece, so I made some money. But that's how it was basically going for me. A lot of the trades today, I think I got a little bit greedy when you just weren't getting enough bounce to hit like two targets. You get one target, and then the market would fade. Besides this, that happened. But here were my trades around. I even tried here right before this happened at 11:58 and long at 2:54, and then I tried it again because I just felt like the market was trying to turn a little bit, especially around lunchtime, and then I was able to kind of nail this and get targets and get out at 260 versus 251. Also, this nice Amazon trade that I was in a call spread, and I took off in pieces. I bought the short end first, and then sold the long end too, and net I made some money on that. But you could see this is not like I'm not patting myself on the back, because I had a few trades that I ended up getting stopped out in. So I'm trying. I'll kind of continue to do this as long as long as I'm really defining my stops. Then sorry, I'm just reading my phone. Then I'm okay with taking little shots like this, even though I still think the best thing to do. I've been doing this for a long time, so I'm comfortable with what I'm doing. But I think if you're a newer trader, you just want to get out of the way of this, and maybe watch for those small caps to start to outperform a little bit. Now, they don't have to outperform like crazy. They just have to as well stop going down more than what SPY is doing. So that's something that I'm watching for. And again, I think that at the end of the day, this is not normal, right? And I think all of this news with all of these things being closed and the state of emergencies, this was a step that had to take place, in my opinion. That's why, I thought things would get worse before they get better. Did I think that they would go down quite this fast and this hard? No, I did not think that we were going to see a monumental collapse like this. But these are things that had to happen, I think, in the United States. Things people have to get serious about this, and I'm sorry that the administration and even the health professionals, up until yesterday, really were not getting serious about this, and mainly today. So let this play out. Let it play out, a little bit further. Um, I think what they're saying too about, people are going to get this virus. You just don't want everybody to all get it at once and flood the hospitals and so forth. So this social distancing, I think, is a good idea. Now we just have to let it play out. Will they close the markets on this? We don't know, because the market can't keep going down in 10% clips. But that might be a possibility. I would not rule that out at this point, considering how fast we are moving like this. But I think at this point we're pricing in a lot of bad information. That is being, in terms of all these sporting events closed, Broadway being closed. Again, these are things I think that had to happen. And now, let this sink in for a little bit. And I was going to leave you with this for the kind of the last thing to mention here is that by when there's blood in the streets, I think we're getting to that point, right, at this point, that and I'm waiting for some, a little bit of confirmation. I've talked about confirmation and how we haven't gotten it yet. But I think provided that we get a little bit of that, and a buy signal, which I will be all over once that happens, and that's basically what I do. I try to sit on my hands as much as possible. I'm closing, like, all those day trades, all those trades I was showing in my blotter. Those are all closed. So I'm not really trying not to wear any risk overnight, and we'll go from there. Sentiment is completely washed out at this point, so that also, I think things are getting priced in. It's just a process and a matter of time. All right, guys, take a deep breath, relax, and I'll see you guys back bright and early tomorrow morning. Have a great night, everybody.